Hello and welcome. In previous lectures, we have saw how the capital markets formation takes place. What are the characteristics of markets are? In this lecture, we'll be discussing about the factors which leads to the development of this capital market. So let's get started. Okay. So the first factor which helps in the development of this capital market is the earning from trade. Now, what is meant by earning from the trade? What is meant by the how the trade helps to development in the capital market in the economy? See, trade stands for the buying and selling of commodities or services. Now, whenever you need a money, you do trade, or whenever you do trade, you get money, or vice versa. And to do a trade, you have to have a company, you have to have a commodity at your disposal. And to have a commodity, you have to have a production plant. And to have a production plant, you have to have money. Okay, now from where this money will come? From banks. But banks always not give you the money because you don't have this kind of securities. So what will you do? Then you'll go to the capital market. You'll raise some money from the capital market. And whenever you need a money, the capital market helps you. And after raising those money, you will invest those money, or the trader who wants to build up a new production plant will invest those raised money from the capital market into his own production house. Now, after raising that money, then he will again engage himself into the trade, and then trade will flourish, and then money will come and float. And this is all about the trade environment will build up into the economy. So, the point to be noted here is that the capital market actually helps into the building up of a trade environment into the economy. And so, whenever there is a trade into the economy, there is a capital market development into the economy. Now, let's take the example of England. England is the first country where the industrialization took place. And though the industrialization took place into the England, they always needed money for those new investment, and so they developed a capital market into their economy. So this is how the trade the trade leads to the development of the capital markets. Now the second, modernization of agriculture. Now see, the second important factor about the factor leads to the development of capital market is the modernization of agriculture. See, England's industrialization development helped their agriculture sector to get a tract or get a boost for their development. When the agriculture sector starts developing into the England, then those earnings from the agriculture was diverted into the capital market. People were getting surplus funds, people were getting benefits from their trade by selling their produces, and those produces or those money which they have got from those sold produced was getting diverted into the capital market. And this is how agriculture helped into the development of the Indian capital market. So again, I am taking the example of England because England is the first country where industrial revolution was started. And when the industrial revolution was going on into the England, it was not the industry was benefiting from the that revolution only, but there were some sectors which were indirectly or directly connected with the industry. They were also getting benefited from this kind of all revolutionary activity. And this is how the capital market in England was flourished. Okay, now third, the plugging back of profits. Now industries which are engaged or which have engaged themselves into the production activities, they get some profits by their trades activities, or by selling their commodities or services to the people. Now, a true entrepreneur will not be stopped by merely seeing some few amount of profits, but he will energized, or he will be motivated to again do a new kind of investment into his new plants. And after investing into the new plants, he will be doing some kind of production activities at that new plant, and then again selling that new produces and new goods to the market. But to set up a new plant, he will be in a need to do kind of some kind of investment, and that investment will be coming from the capital market itself. So this is how, or this is what we call the plugging back of the profits, that the industries invested their profit from their day-to-day activities into the capital market, and this has given the boost to the capital market in England also. Okay, so this was another factor causing the accumulation of capital into the England. Now, bank loans. In case of Japan, here I've given the case of Japan. Banks were major instruments in financing industrial expansion. Now, industrial expansion is something, is the direct function of the banking loan activities. Bank the in the Japan has the policy of overloaning. Now, what is my overloaning? See, banks deals in a business of loans based on mortgages. Okay. Now, what is meant by mortgages? That is something you put as a collateral with the bank. Okay. Now, in the Japan, the collaterals taken by the banks from their customers were very less valued compared to the loan given by those banks to their customers. Okay, so this is what we call overloaning, and this overloaning actually helped their bank, because as their investors or as their entrepreneurs got money from the bank, they have invested heavily into their production activities, and after those investment, the returns from those investment were hectic. So not hectic but huge. Okay, so the policy of or the economics of scale, or this theory was working enormously into the Japan, and those the overloans were granted to the company, but the returns were huge, and so the capital formation was taking place at a rapid pace in the Japan. And here we can see that the Japan is the developed country, and it's a country which is comparable with the European countries, isn't it? So this is how Japan has developed their capital markets and their financial markets. Now, development of financial institutions. Financial institutions is the backbone of economical development and the capital development. How? See, finance agencies are something which is a storehouse of money, I would say that. Now, when you have this much money at your disposal, at your in your hands, you have to give this money to those people who are in need. By need, I don't mean the beggars. I mean that the entrepreneurs or the investors or the people who will use this money in a proper way, who will channelize this funding in a proper way to produce more into the economy. And this is how business gets flourished. The more sound financial institutions you have, the more sorry, the more sound economy you will get, isn't it? So the development of financial institutions is a very important factor here, and the channelizing this saving in a proper way will be the will be the boosting factor for the development of the capital markets into the economy. So the capital markets are not a function of any single variable, but they are the multivariable functional things, or the functional models. And these capital markets depends upon this kind of different patterns on different institutions on, and among those, financial institutions are a very important point. Now, emergence of an entrepreneur class. If you don't have the entrepreneurs, you will not be having a good business environment in your country. Why I am saying this? See, you have to have people who are willing to be a job giver and not the job seeker. Okay, and by job giver, I mean the person who will set up his own plant and who will be in a need of people or the investment to invest. Okay, so if you have the entrepreneurs in your country or in your economy and in your market, then you will be having a good capital market. Now, how? An entrepreneur can do a lot thing than the person who is well educated and is still seeking a job. Okay, so entrepreneur is a job giver and he's not a job seeker. And if you are an entrepreneur, if a person is an entrepreneur, then he will be in a need to finance his projects, to finance his ideas. And if his ideas are more productive one and his ideas are more sound one, the rate of capital formation into the economy will be in a high pace. Okay, it can lead economy to the path where development will come. Okay, not the underdevelopment will come, but the development will come, isn't it? So the entrepreneurs are a very important section of the economy, and we can see that the India is the country where the entrepreneur environment is now getting the boost. And the India is the country where I think it is the second largest country where the new startups are taking place. Now, what is startups? What are these startups? Startups are something where the people wants to become an entrepreneur themselves. They don't want to get engaged into these 9 to 5 activities, but they want to do something different than this. They want to produce something. They want to produce a service. They want to give serve people in a different way, but that way will be the profitable way for themselves, and this will create the jobs into the economy, and this job will create the capital into the economy, and this capital will be used in the capital markets, isn't it? So this is how the economy, the capital markets are made up of. This is how the functions of capital markets happens. These were some factors. Other than this, there are some different factors, but these were the highlighted ones. So these factors leads the formation of capital into the economy and the capital markets into the country. So till then, uh, in the next topic, in the next lecture, I'll be teaching you the uh, participants of the capital market, BSE and NSE. Out of that, BSE will be our first priority, and in second lecture, I'll be teaching you about the NSE, that is Bombay Stock Exchange and the National Stock Exchange. Okay, till then, stay safe, take care. Please avoid contacting with the people. Okay, so goodbye. Thank you.